Yes, people, a very, very happy morning to all of you. So, guys, we started with a brand new topic in the last class, which was how to prepare a cash flow statement. So, before we head forward to discuss the new concept for the day, let's do a quick revision of what we studied in the last class. So, guys, the preparation of the cash flow statement is governed by Accounting Standard 3 revised. Okay. Sir, what is the meaning of cash flow statement? First of all, cash flow statement is a statement. It is not a accounting process. It is not a part of the accounting process. Means preparation of the journal, ledger, that accounting process is there. No, it does not fit into that process. It is a job to be done after the preparation of the final accounts. So, cash flow statement is a statement, first of all. Sir, what does this statement do? This statement provides us the information. So this statement provides us what information? It provides the information about the changes in the cash and cash equivalent. Sir, what do you mean by changes? Changes means movement in the cash. So what do you mean by movement? Movement means what? We are trying to determine the inflows and outflow of the cash and cash equivalent. From which all sources the money has come in. To which all sources the money has been applied towards. So that information this particular statement gives us. So cash flow statement is a statement providing information about the changes in or movement in cash or cash equivalent of an enterprise, and such inflows and outflow should be categorized either under operating activity or investing activity or the financing activity. Any problem with this? In other words, it provides the summary. Correct? No? So we saw example yesterday. We had a cash and bank ledger having thousands of information in it. So it is becoming very difficult for me to get a complete picture about the inflows and outflow of the organization. And hence what happened? We made a summarized version of the cash and bank ledger. So it provides summarized breakdown of how the business generates the cash, that is cash inflow, and the inflow what it has come, how they're using that cash inflow towards the cash outflows, that is the payments, by categorizing them into three activities. So whatever the inflows and outflows, Tarni, we are trying to look into, it has to be categorized either under operating activity or investing or financing activity. So this will help the users of financial statement to understand, analyze, evaluate the liquidity or the solvency position of the company. So we saw the examples for this in the last class. Any problem? No, sir. Okay. So this is nothing but a summary of the cash and cash equivalent. Wonderful. This helps us to understand the cash generating ability of the enterprise. Am I right? So we saw example where the person is profitable. That is, he's got a credit sale of how much? 3 crores. Correct, no? And what is the expenditure? 2.5 crores. 50 lakh was profit. All the sale was credit sale. But all the payment was cash payment. So now what happened? Though the company is in the profit, but it did not generate the sufficient cash enough to pay your liability holders. Remember this example yesterday which we discussed? Yes. See, we saw another example where the company purchased the goods on credit for 1 lakh rupees and sold it for 250. Goods purchased on credit for 1 lakh, sold for 250. So as per accrual concept, the company made a profit of 150. But if the company fails to collect this money subsequently, what happened? You will not be able to make the payment on time to the creditors. And that can hamper the relation with the creditors. And later the creditors might not, Nishi, might not. He will not sell the goods on credit subsequently. So if you don't want to get into that situation, it is important that whatever cash inflows are coming, it comes on time. And you have sufficient cash inflow so that you're not relying on selling your investments or raising more funds. So we saw example where a particular case where the organization had operational loss, means cash flow was negative operationally, means we didn't have sufficient money to pay the operational expenses itself. Then what did we do for that purpose? We sold assets. Then we raised bank loan. Then we raised money through by issuing debentures. So this is all putting the company into critical situation. So by looking at the cash flows, you understand that the company is not, yes, the management of the cash flow is not being appropriately done in the company. So this requires a immediate attention. So there's a red flag in the cash inflows and outflow not being managed properly. So this is the complete aspect of why the cash flow statement is prepared. Then what did we look into? We looked at the important meanings. So what is the meaning of cash? Cash in AS3 comprises of cash in hand and demand deposit with bank. Demand deposit means what? Any money that is with the bank and that we ask them without their permission. Means we can get that money back from the banker without asking their permission. So the money which is there in your savings bank account, current account, and flexi deposit account. I can put that money into it whenever I want, and I can withdraw that money whenever I want. Nobody to ask me. Am I clear? So this is called as cash. What is cash equivalent? Something which is not cash but equivalent to cash. And for that to become equivalent, three conditions needs to be satisfied. First condition, it should be highly liquid. Means what? It should be able to, I should be able to convert that item into cash easily, very easily. It should be readily convertible into cash. First point. Second, it should have very short-term maturity. Means what? Whenever I'm investing that money into that, I'm supposed to get that money back within a span of 3 months. Up to 3 months should be the maturity period. Third condition, whatever amount you've invested, this should have no risk of change in value or very, very low, mild risk of change in value. If all these three conditions together cumulatively satisfied, then it's called as cash equivalent. If any one condition also is failed, if any one condition also failed, then it is not cash equivalent, it becomes your investments. So this note, preference share also example discuss, I'm not getting into it. Examples, checks in hand, draft in hand, short-term investment means marketable securities with no risk of change in value. Plus amount is getting back to you. You get the amount back within 3 months or up to 3 months. And third is highly liquid. Short-term deposit in bank. So all these are the examples. So this also we saw. Any problem in this? No. Cash flow means what? Cash flows in the context of AST is nothing but inflow and outflow of the cash and cash equivalent. Inflow and outflow of cash and cash equivalent. Now please tell me, check deposited into bank. Will it constitute inflow or outflow? No, because it is shifting of money from one pocket to another pocket. So however, cash flow excludes the movement between the cash and cash equivalents. Between the cash and cash equivalents, if there is any movement, then there is no flow. Okay. Operating activities means what? These are the principal revenue generating items or ancillary revenue generating items of the enterprise, which is neither investing nor finance. So I would rather say that anything which is not investing in finance will come to your operating activities. When people see from the point of view, this is principal or not principal, this is ancillary or not ancillary, you might have a debate in some other items. But I would say this is a residual category. Means what? If anything which does not fit into investing activity, if anything that does not fit in the financing activity, automatically you can put that in the operating activity. Any problem? Investing activity means what? Acquisition or the disposal of long-term assets other than the investment which is not included in cash and cash equivalents. Means short-term investment, marketable securities maturing up to 3 months is not a part of investing activity. Then we discussed financing activity. Financing activity means what? Any company raising its finances, that is funds, either through capital mode or either through debt mode. So anything which is increasing or decreasing capital, anything which is increasing or decreasing debt, or anything related to capital, anything related to debt, everything is financing. Everything is financing activity. So far all of these we discussed in the last class. So I'm just doing a summary of the topics that we discussed in the last class. Now begins the new topic for the day. Cash flow statement is prepared as per Accounting Standard 3 revised either by direct method or either by indirect method. In your 12th CBSE, which method did we study? Indirect method. So here we are studying both direct method and indirect method. In 12th CBSE, why did they skip direct method? Because it is very easy way of preparing the cash flow statement. So they didn't include that in syllabus. But in CA intermediate, we're supposed to know both direct method and indirect method. So the question that arises is that, sir, which method is more appropriate compared to, methods? Which method is more appropriate? What do you think? Indirect is what he's saying. Okay. So before you conclude direct is better, indirect method is better, you should first of all know what is direct method, what is indirect method. Without that, you cannot comment which method is better. However, Accounting Standard 3 says that direct method is the better way of presenting the cash flow statement. So where it is said? Here it is. An enterprise should report cash flow from operating activities using either direct method or indirect method. Direct method provides information which may be useful for estimating future cash flow and which is not available under indirect method. So this I will discuss after I complete all the methods with you. Therefore, and is therefore considered as more appropriate than indirect method. So since your direct method is giving you better picture of the cash inflows and outflow directly, that is more appropriate method compared to indirect method. But in the industry, which method is more widely followed is indirect method. Why that logic I'll discuss in some time. So AS3 feels direct method is more appropriate in terms of presenting the cash flow statement, but the industry wide, the highest amount of method that is being followed is your indirect method. The logic of that will be discussed shortly. In direct method, major classes of gross receipts of cash and gross cash payment are disclosed. In other words, if I have to just tell you an example, you remember we did one case in the last class, one sum. You see this? I gave you one cash and bank information. Using this, you have prepared the cash flow statement. So this cash flow statement, what I prepared is a proper cash flow statement under direct method. This is direct method. The beauty of this is that under cash flow from operating activity, you're able to disclose the inflows item wise. How much inflows come from cash sale? How much outflows happen towards cash purchase? How much outflows happen towards cash expenses? Expenses obviously will give breakup. In a cash flow statement, if I have 10 expenses breakup, 10 breakup I'll give you. So what happens? When I'm seeing this cash flow statement for the very first time, even though I'm not a CA, I'm coming from normal accounts background. When I see this cash flow statement, this makes some sense. What sense it makes? Acha, 2,50,000 this company has, got inflow from cash sales. Let's suppose 3 lakh rupees has come from debtor. So debtor gave me 3 lakh rupees. Money received from debtor, another 3 lakh rupees. So from which all different sources the money is coming, that source is clearly visible to me where? On the face of the cash flow statement. It is understandable. It is more kind of a layman language presentation than compared to indirect method. That is why AS3 suggests that this is more appropriate method of maintaining your cash flow statements. If you look at the language, the direct method provides information which may be useful in estimating future cash flows. So now, for example, cash sale is this time 2,50,000 rupees. Now you would have kept a target. So this year we wanted the cash flow to be 4 lakh rupees, but you got only 250, which means you can work more hard on this segment to generate more cash sales. You said this time's cash purchase is going to be, or let's say cash expense is going to be only 1 lakh rupees. You kept a budget of 1 lakh rupees, but you ended up spending 1,50,000 rupees. So now this can lead to your budgeting control. Means what? In future, I'll try to restrict my cash expenses because it is apparently known here that so much of money I've spent here. So here I'm able to make some more decision making than compared to indirect method. So indirect method, how are they preparing? Under indirect method, how are they preparing? I'll just tell you I'll show you the glimpse. Those who have not studied 12 CBC with me or those who have not done 12 CBC, I'll just show how these people prepare the indirect method. This is indirect method for you people. This is indirect method, complete format. Net profit before tax and extraordinary item. First of all, even a person who's coming from accounting background, net profit before tax and before extraordinary item, to process this itself, he will go in coma. After that, they're telling add non-cash and non-operating expenses. He will go into deep coma where he cannot come back at least for next 1 year after looking at this term non-cash and non-operating expenses. And these items needs to be added. Why these item needs to be added? A person who is not done CA, a person who has never studied cash flow statement can never understand this. Less items to be deducted. Why the hell this should be deducted? Nobody knows. Add decrease in current asset, increase in current liability. What is current asset, current liability got to do with the cash flow statement? Like that, who will think? A person who does not know cash flow statement, he'll start thinking. So for a person who does not know cash flow statement, even though he's coming from a background of commerce and accounts, he finds this method a little difficult to understand. Whereas, look at this method, no, so easy. Cash flow from operating activity. Acha, so much is cash sales. So much is money received from debtor. So much is money paid to creditor. So much is cash purchase. So much is the salary outflow. So much is the stationery outflow. Like that, I can have a category-wise information. So please tell me, a person who does not know cash flow statement, for him, which method looks more digestible? Direct method looks more digestible because direct information is provided. How much is cash held? How much money collected from debtor? Directly it is coming to me. That's why the name is direct method. Indirect method, what happens? There's no information directly. You need to become a pro to understand why all these items are added and subtracted. Every single item which is added and subtracted, it has got a meaning to. It's a beautiful meaning behind why everything is added and subtracted. But this you can read only when you know the cash flow statement in detail. Now I'm telling that we are preparing cash flow statement for those 7 users. Am I right? Is it necessary all those 7 users should come from a commerce background, accounts background? They could be also from science background. Is it necessary everybody who's coming from commerce background should be or should have prepared for CA in their lifetime? Not necessary. So a person of that type, if you give him this complicated language, indirect method, will he be able to understand this? So the ultimate purpose of serving the information to those 7 users is not met, no? Because ultimate purpose of preparing the financial statement and all this analysis document is to give that information to those 7 users. Ishi, why are you lost constantly? I'm seeing since yesterday. Sunday तो आराम से घर पे बैठ जाती, सो जाती फिर. It looks very odd when the person is sitting here and I can see some 2 people are literally disinterested in the class. It kills the motivation of the person who takes the class. Sunday morning, I've left my family behind. I've come all the way to take classes for all of you. And to what? To have a look at this face. You can manage the chapter on your own. You can manage. I'll go to next chapter. I have nothing to do. I have 12 CBSK anyways recording, which is almost 80-90% covered. If you want, I can give it. Not a problem. Why should I go from scratch? Think about it, no? So, for a person who's coming from non-commerce background, indirect method could be a little difficult to digest. But direct method is something which is, making sense for him to understand. So that's why accounting standard feels that that is the more appropriate way of presentation of the cash flow statement. Now the question is, sir, as you said, direct method is more lucrative, more understandable. Then why is industry not preferring to prepare the cash flow statement under direct method? Why are they going for indirect method? See, please understand, direct method means what is the source of information for preparing the cash flow statement? Cash and bank accounts. Means all the, not just cash and bank accounts, all the cash accounts and cash equivalent accounts. So all these accounts have to go through. And from that, I'll get the information. Now, that runs in several thousands of pages. So as a chart accountant, who's employee of the company, or as an auditor, for me to prepare the cash flow statement from such records is very complicated because I have to go through so many items. And imagine if I'm not the employee of that company, I will not even know this money is coming from which all person. Mr. X, you have in the ledger, Mr. X, 1,000 rupees. Mr. X gave 1,000 rupees. Why did he give 1,000 rupees? For what purpose? Nobody knows. Is he a debtor? Is it reversal of, creditor? We gave the money to creditor and he gave the money back to us. So is he a debtor or is he a creditor? We don't know. So it's about receipt of money. Money is coming in. So money can come from the customer first hand. Or I might have given the money to creditor. Since I'm returning goods back, I'm getting my money back. So debit what comes in. So money is coming in. So whether this money is coming in by debtor or it is coming because of creditor, we don't know. So like that, getting information about the cash and cash equivalent through cash ledger for the person who is preparing the cash flow statement is very difficult. It is very time consuming also. Hence, we prefer indirect method because indirect method, we are not relying on the cash and cash equivalent ledgers. We are relying on the balance sheet and the P&L account. So from that, we do reverse calculation. Anyways, as a CA, we are pro in reverse calculation. No? So using reverse calculation, we are done with the indirect method. So it is less time consuming. Whether this is useful to the users of financial statement, that's a question mark. Definitely indirect method is not that much useful as much direct method is useful to the 7 users. But convenience wise, we feel more convenient in preparing indirect methods. It's very easy for us to prepare. So P&L account, balance sheet, and with little bit of additional information. I'm done with my indirect method. Indirect method, I have to be behind the company. Please tell me what is this? Please tell me what is this? So by the time I get the information from that fellow, no, gone. So that's why we feel that it is very less time consuming. So indirect method is the most adopted method worldwide. Am I loud and clear?
Yes, sir.
Now, the direct method provides information which may be useful in estimating the future cash flows and which is not available under indirect method and is therefore considered, direct method is considered more appropriate than indirect method. Any problem? Okay. Now, I thought of doing first the questions under indirect method because that method is very simple. From the examination point of view, what is important is indirect method. And this is a little bit complicated also. So now since you are in a good motivation, because new chapter, that new motivation is there. So I would want to use that for indirect method first. Direct method is very easy. Juju Peters. So all good, can we start? Yes, sir. Now, I'll give you a broad format of how cash flow statement works. Okay, one more thing which I forgot to tell. Please tell me, when we see the two methods of preparing cash flow statement, one is direct method, another is indirect method. People think that it is on the whole direct method, on the whole indirect method. No. When we say about the method of preparing is direct and indirect, it is only from the point of view of the operating activity. When I say AS3 is giving you two methods of preparing the cash flow statement. So it is not that the entire cash flow statement is prepared under direct method or entire cash flow statement is prepared under indirect method. Here the direct method and indirect method is restricted only to operating activity. Why? Because the non-operating activities such as investing in a finance activity, the way you prepare under this method and the way you prepare under this method, both are same. In fact, to be very honest, in 12th standard, whatever you studied, how to prepare the financing activity, how to prepare the investing activity, all of that was direct method. It is always direct method. Direct method means what? I'm taking the value and directly substituting. So now, asset sold, it's a direct information that I've got. So I put under investing activity. Shares are issued for consideration in cash. 5 lakh rupees we've received. So that directly we are showing in the financing activity. So any information which is directly shown, any transaction, any line item, easily shown, directly shown is called as direct method. Now, under indirect method, what happens? We are not showing the cash inflows directly. From the net profit, we are doing all the plus and minus adjustment. We are doing a reverse calculation and telling this is my operating profit or this is my operating cash profit. So you're not touching the nose like this. We're touching the nose like this. Under which method? Indirect method. And for which activity? Operating activity. Are you able to follow? So, direct method or indirect method is only for the purpose of preparing your operating activity. Your preparation of the activities based on finance and investing is always direct, direct, and direct. Okay. Ask them to go inside. Yes, are you able to follow? So operating activity is prepared either on the basis of direct method or indirect method. Whereas your finance activity and the investing activity is always, always, always direct method. Always it is direct method. Any problem? Please tell me, people. Any problem in this? No, no energy. No, sir. First room, sir. Operating activity under direct method. All the information directly given. This is my cash sales. This is the money received from debtor. This is cash purchase. This is the money paid to creditor. So I get to know final what is my operating cash profit. Whereas in indirect method, you don't display any information of cash sales, cash purchase and all. You go through net profit in the reverse manner. Indirectly from the net profit, we derive the operating cash profit. Therefore, this is indirect method. Whereas when you present the data of the financing and investing activity, you don't do any reverse calculation. You take the value and directly substitute. So when you prepare the finance activity or the investing activity, either under direct method or indirect method, the way you prepare is always in the direct form. So direct and indirect per se is only for the operating activities. Now, I'll give an outline structure how it works. This entire cash flow statement is bifurcated into few parts. So how many parts? Let's have a look at it. First part is cash flow from bar used in operating activity. So through this, we'll get one answer. If the answer is positive, means if the cash inflow is more than outflow. If inflow is more than outflow, so you have positive inflow. Positive. Sometimes your outflow is more than inflow. Outflow is more. In that case, your cash flows will be negative. So if the answer is positive, it is cash flow from. I'm getting money from operating activity. And if it is negative, it is cash used in operating activity. This is A. This is the first thing that you will do, whether direct method or indirect method. Second, cash flow from bar used in investing activity. When will the answer be positive? When the cash inflow is more than cash outflow of the investing activity, the answer is going to be positive. And sometimes the cash outflow is going to be more than cash inflow. In that case, it is going to be negative. Positive means what? Cash flow from investing activity. If it is negative, then it is cash flow used in investing activity. This is your point number B. Third is going to be cash flow from bar used in financing activity. The answer is positive. When does it becomes positive? When the cash inflow is more than cash outflow, it is positive. When does it become negative? Cash outflow is more than cash inflow. So if it is positive, it is cash flow from financing activity. If it is negative, cash flow used in finance activity. This is point number C. So like that, activity wise, you will calculate your cash flows from the operating, investing, and financing activity. Or activity wise, you will calculate the cash flows. Now, once you get the cash flows, the fourth step is to get the net flow, net change in cash and cash equivalent. So what is the net of these three? Means what? I have to add all the three. I have to add all the three. So net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. So basically, you're doing net flow. Means what? A plus B plus C will be this answer. So this is my net change in the cash and cash equivalent. And with that, what do I do finally? Add opening balances of the cash and cash equivalent. Add the opening balance of cash and cash equivalents. What do you get? This should automatically match. This should automatically match your closing cash and cash equivalent. So this is one question where by the time you complete the cash flow statement, you will get to know 99% will get to know your answer is right or wrong. If you have done some mistake here and there, this will not tally. So the beauty of this is that by the time you complete the cash flow statement, you will get to know what you've done is right or wrong. So this final answer should be equal to the closing cash and cash equivalent, which is given in your question. Any problem in this format? This is the entire format, people. That's all. How many segments totally? 5, not segments, 5 parts to be more precise. There are 5 parts. First part is what? Cash flow from or used in operating activity. Then cash flow from or used in investing activity. Then cash flow from or used in financing activity. We'll get the net flow. So this is nothing but this is opening balance. Leave the opening balance and leave the closing balance. Apart from opening and closing balance, we have the all other transaction inflows and outflows. All those inflows and outflows, we have categorized them into 3 categories: operating, investing, and financing. So when I do A plus B plus C, all the 3 when I net off, this net amount what I get, no, it is nothing but the difference between the inflows and outflow. So I'll get net flow. And with this, what do we add? We add the opening balance. If I add the opening balance, it will be equal to the closing balance. So if I have to put this in ledger format, what is opening balance in this question? 50,000 was opening balance in this question. To balance brought down 50,000 rupees. And all this item we netted off. We got a negative cash flow of 20,000 rupees. If you see here, net increase and decrease. If I add and minus all the inflows and outflows, the net inflow and outflow is how much? 20,000 means net outflow is 20,000. Net outflow means what? Credit what goes out. So can I say that 20,000 comes here? Credit what goes out, debit what comes in. So net 20,000 is spent from your pocket. So what is the balance? 30,000 rupees is the balance. So in the cash flow statement, you calculate this first. With this, you add or minus the opening balances so that automatically will get be equal to your closing balance. This is your outline structure of cash flow statement. Any problem in this? No. Under this, what are we supposed to do? Prepare the cash flow statement. Under this, all the cash flow statement is prepared. Now, cash flow from operating activity can be prepared in 2 methods. One is that method, second is indirect method. Whereas cash flow from investing in finance activity, always by default it is direct method. So any difficulty in understanding the outline structure first of all? Online people, any difficulty in understanding the outline structure?
No, sir.
Online people, please open your mouth and respond.
No, sir.
Dharni Mohan, Hariharan, Inu, Pavitra, Reshma, Sushmita. Any difficulty in understanding this point?
No, sir.
No, sir.
Wonderful. Now, we are going to commence the preparation of the cash flow statement under indirect method. For that, you have to understand, or let's do a quick recap of the format in which you prepare the P&L account. Can we go through that quickly? Because if that is not clear, I cannot start with the indirect method. Now, please tell me, people, if I have to prepare a statement of P&L for a company, what is my starting point? Revenue from operation. So let me prepare statement of profit and loss for the year ended so and so. Any problem? Now, first item is revenue from operations. Second item is other income. If I add these both, what do I get? Third item is total income. Online people, please open your mouth and respond. We get total income. Wonderful. This is called as A. Fourth item is expenses. Under that we have cost of material consumed.
Cost of material consumed.
Can you tell me the formula for cost of material consumed?
Opening
stock
raw
of what?
material.
Raw material plus net purchase of raw material minus
Purchases.
closing stock of raw material. Wonderful.
Minus closing stock.
Then
Purchase of stock in
purchase
trade.
of stock and trade. Wonderful. Then changes in
Change in inventory of WIP, finished goods, stock and trade.
stock and trade. What is the formula for this? Opening stock minus closing stock.
Opening stock minus closing stock.
Expense negative reversal of expense. Then
Employee benefit expenses.
employee benefit expenses. Very good.
Finance
Then,
cost.
fifth one is finance cost. Then depreciation and
amortization expenses. Other expenses.
Category. Residual category, other expenses. Anything that does not fit in the above category goes to your other expenses category. All of them put together is called as total
expenses.
Fifth one. Net profit or profit.
Profit before tax.
Before tax and extraordinary and exceptional item.
Okay.
Profit before tax, extraordinary and exceptional items. With that, what do we do? Add extraordinary items or exceptional items. Example of extraordinary items. Insurance claim money received from the insurance company for either loss of goods by fire or loss of assets by fire. Extraordinary item which is income in nature. This is income in nature. Gain in nature. To be very honest, it's not income, it is gain. The money that you have gained. Okay. Then less extraordinary item or exceptional item which is loss in nature. Loss in nature. So that we have to subtract. What will we get? We will get profit before tax. We get profit before tax. Then what do we do? Less provision for tax. Less provision for tax. Which year? Current year. You always create the current year provision for tax. Tax is created as a provision in the current year. This concept you know or not know? Anybody who does not know why the provision of tax is coming for current year? No? Okay. Add tax refund. Tax refund of which year? Previous year. Current year tax is not even paid. Provision is created. When will you pay? Next year. So refund what has come is of which year? Previous years. Minus. No, this is minus. This is add. What do you get? You get profit after tax. You get profit after tax, which is shortly and sweetly called as PAT. Now, from the PAT, either you can do appropriation here or you can do the appropriation in the notes to accounts also. Both methods are followed. Which is the right method? Taking it to the surplus and from there appropriating is the right part. But in 12th standard, what did we learn? We did the appropriation here. So in some question also in ICA model, the appropriation is done here. In some places, the appropriation is done in the notes to account. Sir, what is the meaning of appropriation? Please tell me, all of you have studied partnership with me. In partnership, what is the purpose of the P&L appropriation account?
Distribution of profit.
Appropriation means distribution. So here, whatever the profit is available now, after you make the payment to the tax, make the payment to government as tax, the remaining money is for whom? The company and its shareholders. So now you have to distribute. So from here, what happens? You make savings. You transfer the funds to reserves as savings. Whatever the profit is available to the company will not distribute all the profit. It has to keep some amount in the reserves, either general reserve or any specific reserves. Second, from here they'll pay the interim dividend. From here they'll pay the interim dividend. From here they'll pay the equity dividend. They'll pay the preference dividend. To be very honest, first should be preference dividend, then equity dividend. Even before you give the equity dividend, it should be preference dividend. So preference dividend, interim dividend of equity shareholders, and final dividend of equity shareholders. So what is this? This is nothing but you are appropriating the profit. Appropriating means what? Distributing the profit. From the profit, I'm transferring some portion to my savings. Savings means in business it is reserves. Some amount I'm giving as a distribution to the preference shareholders. Some amount I'm giving as a dividend to the equity shareholders. So this is nothing but distribution of profit. This is called as appropriation of the profits. This appropriation is sometime done here, and then the final amount is transferred to surplus. Or this amount is transferred to surplus, and from there you do the distribution. Are you able to follow? Both are adopted. Now you have questions both based on both. In your ICA module, you have questions based on both. So you should be knowing both the options. Looking at the question, you should understand whether they have distributed the appropriation in the P&L account or whether they have done the appropriation from the notes to accounts. You have to see into it. Am I loud and clear? Now, in this point, in this format, if you have any doubts, please ask me. Somebody had a doubt, sir, why provision for tax is coming in here? Please tell me. Let's do a quick recap. This is current year. Current year, which current year is gone by now? 24-25. Wonderful. Let's talk about 24-25. 24-25, from this date to this date, the business has been running on day-to-day basis and the company has made huge profits. Correct? As per the rules and regulations, whose rules and regulations? Income tax rules and regulations. You're supposed to file the income tax return. You have to submit the income tax return to the income tax authorities of 24-25 in the financial year 25-26. And all of you know that all the companies are subject to audit. And for them, they have to submit their income tax returns by 30th of September, not 31st of July. 30th of September. All the individuals other than companies who are not subject to tax audit, they have to file by 31st July. Companies by default has to submit the income tax returns by 30 September. This is the last day, which means somewhere here, the auditor of the company will finalize, okay, this is what is the tax that I'm going to pay. Please understand, the accounts what you prepare is as per the accounting standards. Income Tax Act will not accept what you present to them. They want the profit statement as per their rules and regulations. So you have to do the modification in the accounts, not in the accounts, on the paper and present the data to whom? Income tax authorities. For example, you might adopt for depreciation under SLM method. Income Tax Act does not accept the SLM method. They want WDV method. So according to that, you have to modify them and give the revised trading and P&L account and balance sheet. Are you able to follow? So generally, somewhere near the date of filing the returns only, the auditor of the company will properly sit and calculate the taxes. He will then only properly do all the adjustments for the taxes. Am I loud and clear? But before that, the financial statement needs to be signed. So at the time of preparing the financial statement, here somewhere, when I'm finalizing the accounts, when I'm going to sign the balance sheet, I have to create a provision for tax or not. Because the exact amount of tax that I'm going to pay is known to me later. But I can estimate the tax now because I know what is my income. Approximately we can estimate. So now the rule says that we have to approximately estimate the tax of the current year 24-25 and record that with effect from 31st March. Means as on the day of 31st March, you have to record the provision for tax. Means what? Once the audit is completed, and even before the auditor is signing the report, that is statutory audit report of the company or the audit report of the company, before he signs the balance sheet, he has to prepare a provision for tax account and he has to pass an entry into that. He has to estimate the tax. What is the meaning of provision? Estimation of the future outflow of the money. Why am I saying estimation? Because exact taxation I will know only when the auditor is sitting and properly calculating the profit as per the income tax rules and regulations. So now when I'm signing the balance sheet at this date, on this date when I'm signing the balance sheet, I'm not preparing the balance sheet or P&L as per your tax law. I'm preparing as per the accounting standards. As per the standards of various accounting, let it be Ind AS or accounting standards, whatever it is. On that basis, I prepare the profits here. So at this stage, I can only estimate the tax, but I cannot calculate the exact tax. I cannot calculate the exact tax. Since I'm not able to calculate the exact tax, then the tax what I've calculated becomes a provision. What is the meaning of provision? It is a possible obligation. Is it an obligation to pay the tax in future? Yes. Second, there should be outflow of economic resources. Am I going to pay the money in future? Yes. But the amount I cannot calculate, determine. I'm not able to determine the value now. I can only calculate that value with reasonable estimates. So since third point is not determinable, it is being calculated on the reasonable estimate basis, then this becomes provision. If I'm able to exactly calculate the amount, then it becomes a liability. Otherwise, it becomes a provision. So this tax, what you're calculating now, is just a provision, because exact tax value, exact amount that I'm going to pay to income tax authorities, I'll get to know only after you prepare the balance sheet. When you're actually sitting and preparing the tax returns of your company, that time actually you'll get to know what is the profit as per tax and what is the taxation as per tax laws. Only that point in time you'll get to know. While signing the financial statement of the company, that time I will not calculate the exact tax. Am I loud and clear? Therefore, the tax what you're showing here, the provision for tax what you're showing here is nothing but a provision of tax for the current year's income. On the current year's profit, this is the tax that I'm proposing to pay. You have to show. This is not exact. There could be a variation. You might have created a provision for 1 lakh, but you might end up paying 1.2 lakh. You might have created provision for 1 lakh. You might end up paying only 80,000. So reality is different. But approximately a provision can be created and this is allowed. Prudence concept allows this. Am I loud and clear? So are you clear why the provision of tax for current year is coming? Okay. Second, refund of tax. Tax refund is coming which year? Previous years. I would have submitted previous year's return or previous to previous year's return. So government takes 1 month. That is after you file your income tax return here, September, either October, November, December, Jan, Feb, March, April, somewhere here, the earlier return period refunds has been processed here. So in current year, if I'm getting any refund, it is obvious that it is a refund of some previous or previous to previous year's assessment. So that assessment ka refund is processed today. Are you clear with what is the term of assessment? In tax, have you studied what is meaning of assessment? Yes. Okay. So here the provision for tax always be for the current year and the refund will always be of the previous years. In this, any doubts? No doubts. Then I said, once you get the PAT, either you take the PAT and add it to the opening surplus or you do appropriation and take the balance to the opening surplus. I'll do either ways. Let's say the PAT is 20 lakh rupees. Let's say the PAT is 20 lakh rupees. Now you're doing appropriation. I'm transferring from here 2 lakh rupees to general reserve. So can I say minus transfer to general reserve? How much? Minus 2 lakh rupees. Okay. So this will get added where? In general reserve will get added. Wonderful. Then now I'm paying, let's suppose, interim dividend. What is interim dividend? Current year we had surplus profit. So somewhere in the current year we had excellent business and we wanted to share that happy moment, joyous moment with the shareholders. So what will you do? You'll parcel one kachori and jalebi and give it to them. Oh, we got excellent profits this year. So as a token of happiness, I'm sharing across jalebi and kachori samosa with you. Will you be happy? I want duddu pa. If you give me duddu, I can go and have treat in Taj itself. So I'm not impressed by your jalebi kachori and all. You give me money. Apna sapna, money. So now the company has got its own way of sharing the happiness with the shareholders. So in any year, if you have got profits beyond your expectation, so that you want to share it to shareholder in form of interim dividend. Means what? It is a dividend that is paid in between of the year. Since you have earned super profit, enjoyed super profit, that profit you wanted to share with shareholders. So that will attract more attention. Correct? No? When a company is giving interim dividend multiple times in a year, can you tell me any one company which gives multiple interim dividend during a year? Have you heard of this company by name Vedanta? There are multiple companies. Vedanta gives 1, 2, 3, 4 interim dividends in a year at least. So what happens? People feel that, oh my God, this company is giving super, and that too it's what? 10 rupee per share, 15 rupee per share, 20 rupee per share. And what is the share price? I don't know what is the price that was trading this time, but when I purchased it, it was earlier almost around 180, 190 rupees. I purchased it. So in the 10, 20 rupees in a year, 30 rupees, 40 rupees dividend means, imagine, 150 rupees if I paid, 40 rupees I got back in form of dividend itself. So it attracts more and more retail investors. I'll be able to follow. So interim dividend. So please tell me, interim dividend, who can propose and who can approve? Board of directors will propose. Who will approve? The company law has given the approval authority to board of directors itself, which means they did not take any approval from the shareholders. So they can propose and they can approve all by themselves. So please tell me, in that case, will there be any delay in proposing the dividend or approving the dividend or paying the dividend? No, it is a matter of time, which means interim dividend proposed, approved in the same year. I did not have to wait for next year for approval from the shareholders. So always the interim dividend paid is of the current year. So let's say that is another 3 lakh rupees. Then you pay the dividend of the preference shareholders. Preference dividend. Preference dividend. Which year? Current year or previous year? Always dividend is of the previous year. Because dividend can be paid only with the approval of shareholders in the AGM. Let it be equity or let it be preference. So preference dividend and the equity dividend is always going to be of the previous year, previous year, previous year. Please tell me, for 24-25, when will the auditor sign the financial statement? 25-26, I know. When? Not during AGM, boss. How can it be during AGM? During AGM, oh, one side shareholders are coming, one side CA is sitting and signing the auditor report. Before the AGM is done, you're supposed to send the entire annual report to whom? Shareholders. The annual report consists of what? Director's report, auditor's report, financial statement, etc., etc. So all this, the company has to take a printout. You know, they have to prepare like a magazine and they have to courier or speed post to all the shareholders. So at least all this process will take 1 month of time. So 1 month before the AGM, you have to finish your signing of the financial statement. So which means the auditor is signing the financial statement before the AGM. Do you agree with me? I'm telling that auditor is signing the financial statement. He is giving the audit report before the AGM, 30 days before, 45 days before the AGM. And the dividend of 24-25 is being approved by whom? Shareholders in the AGM. So now after the audit report is prepared, after the financial statement is signed, only then the AGM is happening. And in the AGM, dividend is being proposed. So that dividend which is proposed of 24-25 or approved of 24-25, not proposed, approved of 24-25, can I go back and do the correction in the financial statement of 24-25? Not possible. Once the auditor signs the financial statement, once the auditor gives the audit report, you cannot go and change even a single letter or alphabet. One number also you cannot change. So therefore, in the AGM, the dividend which is getting approved, no, there is no chance that I can incorporate that in the financial statement of 24-25. Though the dividend is of 24-25. But because of this law that the law is created, the company law, the law that is created, because of that law, I'm unable to incorporate 24-25 ka dividend in 24-25 ka financial statement. So in that case, if I'm not able to incorporate 24-25's dividend in 24-25, then when can I incorporate? This will be incorporated in the financial statement of 25-26. So in 25-26 P&L, I'm presenting the dividend of which year? Previous year, 24-25. So therefore, here, the preference dividend and the equity dividend, I said it is of previous year, not of current year. Any problem in this?
Why preference dividend also?
Because without approval, we cannot pay that also. So now, preference dividend, let's suppose 4 lakh rupees. And equity dividend is 5 lakh rupees. So all of them put together, how much is their net amount? 5 plus 4 is 9. 9 plus 3 is how much? 12 plus 2 is how much? 14. 20 minus 14 is how much? 6 lakhs. So this is called as P&L balance or surplus or retained earning, whatever you say. Okay. From here, this 6 lakh goes where? To your reserves and surplus. So now, reserves and surplus. Under that, surplus. Reserves and surplus. Under that, surplus. In that, we have opening balance. Let's say opening balance is 3 lakh rupees. Add current year's profit, which is how much? 6 lakh rupees. So what is your closing balance? So closing balance is 9 lakh rupees. Closing balance is 9 lakh rupees. Any problem? Any problem? This is one way of preparing. Another way of preparing. What they will do is they'll calculate PAT. How much is PAT? 20 lakh is PAT. Now they will not record any of this data in the P&L account because all these are appropriation. Should be recorded separately. So you might take and do appropriation in the notes to accounts itself. So now what happens? In the notes to accounts, under reserves and surplus, we have surplus. Under that, the opening balance is how much? Opening balance we took as 3 lakh. Add current year's profit after tax. How much? Not 6 lakh, 20 lakh. Because I'm transferring the PAT here. All the appropriation to be done in the notes to accounts. So PAT is how much? 20 lakh. So how much is total? 23 lakh. Now this 23 lakh is not called as closing balance. When does the closing balance come? After the appropriation. So let's transfer to GR. How much? 2 lakh rupees. Less interim dividend paid. Interim dividend paid. 3 lakh rupees. Less preference dividend paid. Less preference dividend paid. Of which year? Previous year. How much? 4 lakhs. Less equity dividend paid. Previous year. How much? 5 lakh. So what is my closing balance? 9 lakh is my closing balance. Here also the closing balance, what you got? Same 9 lakh. Any problem? Online people, any problem?
Sir, different shareholders also participate in the AGM, sir.
No.
But then why we need the approval of different shareholders?
Okay, now the question what Kritin is asking is, sir, why do we need approval of equity shareholders to pay the preference dividend? It's not that we're taking approval from the equity shareholders. Preference dividend to be paid, first, the approval, that is, see, when the dividend payment happens, in the AGM, equity shareholders will approve the equity dividend only. Preference shareholders, approval who gives? Is there any need of approval for? There's no need of any approval from the equity shareholders. But the habit what we have is that whatever the preference dividend is given, it is gone along with equity. It's a norm. So always it is a norm that even though the preference dividend can be paid early, because I don't need anybody's approval. Why? Tell me. Because preference dividend, as long as you have the profit, you have a fixed percentage, you can pay directly. But we have a norm that equity and preference are paid only after the AGM. So by that virtue, both of these are getting recorded in the subsequent years' financial statement. Is this clear? There's no need of taking any approval from the equity shareholders. But it is a norm to be paid together. Now, coming back. Is this presentation understood? I only discussed the preparation of the statement of P&L. Now, your cash flow statement says that under indirect method, when you start preparing your cash flows from operating activity, the starting point, the segment 1 should be profit before tax and extraordinary item. This should be my starting point. But this information is not given anywhere in the question. They'll give you information directly of opening and closing balance. 3 lakh, 9 lakh or 3 lakh, 9 lakh they'll give. Using this, you have to do reverse calculation and get the net profit before tax and extraordinary item. For your information, let me tell you, there is no format as such that has been prescribed by AS3. If you take AS3, in the entire AS3, there's only one example that has been given. And people have taken that as a base and they have prepared the cash flow statement like that. If you look at the entire cash flow statement, anywhere there's no format as such. Like in Schedule 3, we had a format. This is how you have to prepare the balance sheet. This is how you are supposed to prepare the P&L accounts. This is how you're supposed to prepare the notes. The format which is given in Schedule 3, such format of preparing cash flow statement is not given in AS3. Let me tell you very clearly. In the cash flow statement, they have only given the example. So when this AS3 was drafted, they gave an example. This is how we want you to prepare. They didn't say this is like exactly how to prepare. You can tweak it the way you want to tweak it here and there. So the format of the cash flow statement is not given anywhere in AS3. They've only given example. They took this as a question. This is the balance sheet of a company as on 31/12/1996. So they had all this information, asset, liabilities, etc. Statement of P&L, etc. They prepared the direct method, cash flow from operating activity. All the direct information, cash received from customer, cash paid to supplier, cash generated from operation, income tax paid, cash flow before extraordinary item, etc., etc. This was the format. Then cash flow from investing activity, direct information. Then cash flow from finance activity. So what did they do? They didn't tell that this is the format that you have to prepare. They just gave an illustration. You decide what you have to do. So that is people like us, CAs, what we did, we took this example illustration as a base and we started preparing. Same way, there is one example given for indirect method. So this is again example. So if you see the language of the example, cash flow from operating activity. From where have they started? They have started from net profit before tax and extraordinary item. And this is my starting point. Everybody started following this. I taught you one word. What is that? In the starting of this intermediate class. Accounting conventions. What is accounting conventions? Conventions means it is the practices that the people in those days were following, and we just adopted those practices as it is. So same way, this format of the cash flow statement is nothing but a convention. People started this as a starting point, net profit before tax and extraordinary items. So we took this as a starting point. I can take even net profit after tax as a starting point. You take surplus also as a starting point. There's no format that is given. You can take whatever you want to take. But to have uniformity, what is ICA doing? ICA is taking this as the starting point. But in some cases, to his surprises, he is using the word only net profit before tax. Net profit before tax and extraordinary item, they're not using it. If you see the illustration questions, they're not using the word net profit before tax and extraordinary item. The language that they're using is net profit before tax. Net profit before tax is different or not different? Net profit before tax is this. Net profit before tax and extraordinary item is this. So in ICI itself, in few questions, they have taken this as a starting point and they have taken this as a starting point. If you see book bag exercise questions, question 12, 14, etc., they have taken net profit before tax and extraordinary item as a starting point. I'll just show it to you. See here, profit before tax. Profit before tax. Shh. Profit before tax and extraordinary item. So what will we do? We'll always take this as a base. Net profit before tax and extraordinary item, we'll take that as a base. We have to follow uniformity. In case of extraordinary item is not being there, if extraordinary item is missing, in that case, net profit before tax and net profit before tax and extraordinary item is 0. I mean, it is same. If extraordinary item is 0, both of them are same. But for simplicity purpose, we'll always take net profit before tax and extraordinary item as a base. Why? Because even your cash flow statement format says what? Even your cash flow statement, not format, the example says what? Yes, it is net profit before tax and extraordinary item. So to ensure uniformity, we'll always do the same thing. Am I loud and clear? Now listen to me very carefully, people. I want this item. Which item? Profit before tax and extraordinary item. I'm telling you, if the question is giving you this information directly, balle balle means what? There's no need to break your head. The problem is they'll not give you this information directly. They will give you this information. Which information? Closing balance 6 lakh, 9 lakh they'll give you, opening balance 3 lakh they'll give you. And all this information will be given you in the additional information. So what are we supposed to do? All reverse it. All we have to reverse it. Are you able to follow? Now, profit before tax can be derived using 2 ways or 3 methods. How will I calculate this profit before tax? Listen to me very carefully. 3 ways in which profit before tax can be written. 1, it is directly given in question that profit before tax is so and so. Jackpot, nothing to brainstorm here. Second is called as direct method. We call this as forward mechanism. It's called as forward mechanism or top to bottom approach. Means what? How can I calculate this profit before tax? From top to bottom I'll come. From top means from where? I'll come from revenue from operation. So this will be given in question. Other income will be given in question. I'll get total income. Very easy. All the expenses will be given. So from the total income, if I minus total expenses, I get profit before tax. This also is easy method. This also is easy. This is called as forward mechanism. I'm going forward. From this to this, I'm going forward. Forward mechanism. Or top to bottom approach. High chances that these both will not be given in the exam. As a CA, if they test you on this part, then what CA you are? So for us, challenging questions will come. So what is the method name is? Reverse mechanism. Reverse mechanism. We're going now reverse calculation. Or it is called as bottom to top approach. Bottom to top approach. Now from bottom, from the 6 lakh rupees, I'm going upward. Bottom to top. Top means up till where? Up till profit before tax and extraordinary item. From here to here, I'll come and stop. So now, in between what and all you've added and subtracted, everything needs to be reversed. In between whatever you added, to cancel addition, you have to give subtraction. An addition item, an item which is added, to cancel it, I have to give subtraction. If I have plus 1 lakh, to make it 0, what should I do? If I have to make the impact nullified 0, I have to minus 1 lakh. So all the items that you've added earlier, in the normal process, you have to now cancel it by giving a minus. And all the item which is in minus now, to cancel the impact of minus, you have to give add now. Am I loud and clear? Now please tell me, if I go with that logic, closing balance is 9 lakh, opening is 3 lakh. So closing minus opening, if I do, what will I get? 6 lakh minus 3 lakh. What will I get? Sorry, 9 lakh minus 3 lakh. If I do, I get 6 lakh rupees. What is it? Current year's profit. It is current year's profit. Correct? No? 9 lakh is what? Accumulated profits of all the years put together. 3 years of previous year, 6 years of current year, and total is how much? 9 lakh. So your closing balance of the surplus, your closing balance of surplus is nothing but accumulated profits of all the years put together. Of all years put together. From 9 lakh, if I minus 3 lakh, what will I get? 6 lakh is your current year surplus. 6 lakh rupees is your current year surplus. Do you agree with me?
Yes, sir.
6 lakh is my current year surplus. Correct only, no? Current year's profit 20 lakhs you added, sir. Arey Baba, this is before appropriation. And this 6 lakh is after appropriation. Am I clear? So either you go from appropriation from the notes or you take the appropriation from the P&L. Always the starting point is going to be what? Closing minus opening. To get what? Current year's surplus. Current year's surplus. So now closing is 9 lakh. Opening is 3 lakh. 9 minus 3 is how much, people? 6 lakh. Whether the appropriation is given in your notes or whether the appropriation is given in your P&L, it is still going to be the same. So again, 9 lakh minus 3 lakh is how much? 6 lakh is your current year's profit. So now, current year surplus is how much? 6 lakh rupees. Now to get the 6 lakh rupees, what did you do? You added and subtracted so many items. So now go in reverse. What is the last item that you subtracted? What is the last item that you subtracted? Equity dividend was the last item to be subtracted. To cancel that, what will I do? I will add back. So add back. Final equity dividend. How much? 5 lakh. I'll go in the same order. In what order I added and subtracted? In same order, I'll go reverse. Reverse order will be same, ulta order. So what is the second last item that is subtracted? 4 lakh was preference dividend subtracted. Can somebody give this to Anita ma'am? It's a delivery call. She has to pick up. The second last item which subtracted was 4 lakh, which is preference dividend. To cancel this minus item, I have to give a addition. I'm reversing everything now. I'm doing a reverse method. That is what is called as reverse mechanism. So less preference dividend, final preference dividend. Final preference dividend. How much? 4 lakh. Then what's the last but third item which was subtracted? What is the last but third item subtracted? Sir, interim dividend was subtracted. To cancel this less item, I have to give a add interim dividend paid. Which year? Interim dividend of current year. So add interim dividend of current year. How much? Plus 3 lakh. Guys, so if you understand, when I'm adding, what am I doing? Whatever I've subtracted earlier, no, I'm cancelling, I'm reversing all of them. Earlier, this 5 lakh was subtracted. I'm reversing that by adding 5 lakh rupees. I'm doing reversal. So that gradually, if I keep on cancelling everything, I'll come and land up where? Automatically, I'll come and land up here. So I'm trying to reach this place. From surplus, I'm going to come and reach to this place. This is my target place now. So please tell me, what is the last fourth item? From last fourth item. Transfer to reserves. Add transfer to reserve. When you transfer to reserve, you subtract it. Now to cancel the impact of subtraction, we have to add back. Add transfer to reserve. How much? 2 lakh rupees. Now you'll get this amount. What is this amount? This 20 lakh is called as profit after tax, which means by doing reversal, all the way from 6 lakh, we came back and traveled to this place. Now we are sitting here. Do we need this as a starting point for indirect method? No. So I have to still go backward. So now, what is the previous item? Sir, before PAT, refund of tax was added. To cancel this addition, minus tax refund. So less tax refund. Of which year? Previous year. Provision for tax is subtracted. To cancel the impact of that, we have to add back. Add provision for tax. Which year? Current year. I will get 20 lakh. What is this called as? We'll get profit before tax. Profit before tax. Is this my starting point? No, sir. I want to even eliminate the extraordinary items. So extraordinary items, what did you do? All the extraordinary item which is gain in nature, you added. So to cancel, I have to minus it. And all the extraordinary exceptional item which is loss in nature, you subtracted. To cancel this, I have to give add. So now, add what? Extraordinary item or exceptional item. Which nature? Loss in nature. I have to add back. Because earlier I subtracted, no? To cancel the subtraction, I have to add back. Then less extraordinary item, exceptional item. Extraordinary item, exceptional item, which is gain in nature. I have to subtract. What will I get? I will get profit before tax and extraordinary item. Profit before tax and extraordinary items. Any difficulty?
No, sir.
Now we get profit before tax and extraordinary item. This becomes my starting point. Now, what is the meaning of this? Further, what are we doing? Every single thing I'll explain one by one. Now, for warm up, can we do more questions based on this?
Yes, sir.
So again, I'm going back to your own one and only TSG. Few more questions here, people. Few more questions for practice purpose. And this all of you will do along with me. So please take a fresh page. Last class, we completed which question, no? We completed this flow, no flow, right? Wonderful. Now, illustration number 15. Illustration 15. Guys, please understand, all these small questions will not come in exam. But all this small question together becomes your big question. If I take a big question and do it, you'll get confused because in all the big questions, multiple complicated adjustments are there. Nothing will go into head. So all the big concepts I'm breaking down into small parts. So it becomes easy to process one after the other. Like how in schedule 3, what did we do? All the items, revenue from operation, other income, each expenses item, each asset item, each liability item, we saw examples. So when it came to big question, it was very easy for you to understand each and everything. So now we will try to do things individually. Once you become a pro in individual item, we'll combine and do it the entire cash flow statement. Illustration 15 says that following is the extract of the balance sheet of KBC Limited. Surplus is given, people. Surplus is given 5 lakh, 8 lakh. Dividend payable is given 30,000. Wonderful. Dividend proposed, which is final for the year 31st March 21, is 3 lakh and 22 is 350. Prepare a note to show the net profit before tax and extraordinary item. Guys, this is my starting point for preparing the cash flow statement for operating activity. I call this as segment 1. I call this as segment 1. So please tell me, how do I calculate my net profit before tax and extraordinary item? Very simple. So please do it along with me. I've shared this PDF with all of you. Illustration 15. From total income, if I minus total expenses, what do we get? Profit before tax and extraordinary item. I'm leaving the word exceptional here. Leave it. Extraordinary items. From that, add extraordinary item, which is gain in nature, minus extraordinary item, which is loss in nature. This is profit before tax. Don't put this X and all. Just if you want to write it, write this part alone. Write this part alone. Don't write X part. We'll fill the values there. So minus provision for tax, which is which year? Current year. Add refund of tax. Add refund of tax, which year? Previous year. What do we get? We get profit before tax. After tax, sir. Okay. Whatever you say, I'll put. You say before also, I'll put before. After also, I'll put after. Minus transfer to reserves. Minus interim dividend. Minus preference dividend. Minus equity dividend. Interim dividend which year? Current year. Previous preference dividend. Previous year. Equity dividend. Previous year. And I get this one value. This is called as surplus of current year. And this surplus is getting added to your reserves and surplus. In reserves and surplus, under surplus, please tell me what is the opening balance given in the question. What is the opening balance of surplus given in the question? So this is 21-22. This is 2021, which is previous year, which is current year. 2021 is previous year. 21-22 current year. So this becomes the opening balance. So 5 lakh is my opening balance. So tell me, what was added and subtracted in such a way that my closing balance has become 8 lakh? From 5 lakh, how do you think the profit has become 8 lakh? So in current year, we had a profit of 3 lakh rupees. Think about it, no. Closing balance of previous year is nothing but opening balance of current year. In the beginning of the current year, your opening profit was 5 lakh rupees. By the time you came at the end of the year, it became 8 lakh. So in between the year, how much profit got added? 3 lakh profit got added. So what is my current year's profit? 3 lakh rupees. So now add profit of current year, which is the balancing figure. How much it is? 3 lakh rupees. Any problem? So can I say the surplus here should be how much? How much should be a surplus here? 3 lakh rupees. Any difficulty in digesting this? Everybody is comfortable? Everybody is comfortable? Okay. Now please tell me which of these items are being fitted here. Dividend payable 30 is given. Dividend proposed is given 3 lakh of 2021, and for 21-22 it is 350. So which dividend should I record? So always the dividend of the previous year. So 350 is dividend of current year, which is only proposed by the board of directors. I cannot record it because it is awaiting the approval from the shareholders, which will happen only in the AGM. So this 350 will be shown where in the financial statement in current year, in contingent liability. This will be shown in the current year's financial statement under contingent liability. And this 3 lakh rupees is what approved in the current year. Previous year 2021 dividend is approved in the current year AGM. So hence it is incorporated in the current year's financial statement. So 3 lakh is what is subtracted. So 3 lakh is what is subtracted. Any problem? There's no preference dividend, no interim dividend, no transfer to reserve. So what is my PAT? What is my PAT? How much? What is my PAT? 6 lakh rupees. Wonderful. From 6 lakh PAT, if 3 lakh, if I'm transferring to equity dividend, what is the balance? 3 lakh. Is it going in perfect sync? Okay. Any information about refund of tax? Refund of tax is 0. Any information of provision for tax? 0. So what is PBT? Same 6 lakhs. Any information about extraordinary item gain or loss? No. So that is also 0 and 0. So what is profit before tax and extraordinary item? 6 lakh rupees. Profit before tax and extraordinary item, 6 lakh rupees. Please tell me, people, will you do like this in exam income? This is only for your understanding purpose. That I have adopted a bottom to top approach. What did I do? From 8 lakh, I went all the way to getting 3 lakh rupees current year surplus. From the surplus, all the way I'm going upward. All the way I went upward to get my profit before tax and extraordinary item. So what approach is this, people? Bottom. From bottom, I'm going to top. So this is bottom to top approach. Or this is called as reverse mechanism. I'm going in reverse now. So when you go in forward, you add and minus thing. When you go reverse, whatever you added to cancel, I have to give minus. And whatever you subtracted to cancel, I have to give add. So are you able to understand the structure? Now, you will not do like this in exam income. In exam, how will you do it? You will do a working note. Always, this will be a working note. Working note number 1. Calculation of net profit before tax and extraordinary item. Calculation of net profit before tax and extraordinary item. Listen to me very carefully. What is my starting point here? Surplus. Surplus of current year. How do I get it? Always closing minus opening. Don't say opening minus closing. In schedule 3, changes in inventory, what is the formula? Opening minus closing. If you by heart, you'll be in trouble. If you understand the logic, you'll understand. That changes in inventory means what? Opening is expense, closing is reversal of expense. And I'm recording that under expense category. So I want the first item to be expense. So that is my opening expense minus closing reversal of expense. I'll be able to follow. If answer is positive, expense, negative, reversal of expense. But here my motto is to get my closing surplus. So here always my closing balance will be more than opening balance. So closing balance is how much here? 8 lakh. Opening is how much? 5 lakh. Hence I have to do closing minus opening. So that I can get positive profit of 3 lakh rupees. Now close your eyes and imagine what all the items have to add back or minus from reverse. You should be able to imagine this picture. This part should be imprinted in your mind. So when I'm going in reverse, I'll go in the same order. So what is the first item to be subtracted? Equity dividend. Minus equity dividend of which year? Which year? Previous year. How much? 3 lakh. It was subtracted earlier. To reverse, I need to add back. I'm doing reverse now. So whatever is subtracted earlier in reversal, we have to add back. Minus preference dividend. Which year? Previous year. In case this case is 0. So in exam, are we supposed to write the entire format? The answer is no. You will record wherever you have the values. If there is no value, if it is 0, leave that. Now I am doing why? Because I want to train you the format. I want to put the concept in your mind. So I am doing the entire format. Yes, boss. Somebody had a doubt. Yes. Always finding fault in sir. Now add. Go in the same order. Reverse. What is the third, last but third item? Interim dividend. Which year? Current year. Is it there? No. Next. Transfer to reserves. Is there anything there? No. So 3 lakh is called as profit after tax. Then refund is added. To cancel refund, minus refund of tax. 0. Which year? Previous year. Then, sorry, this is 6 lakhs. Now, provision for taxes earlier subtracted. In the normal method, subtracted. In reverse, you have to add back. So, minus provision for tax. Which year? Current year. In this case, it is 0. So, now the 6 lakh becomes your profit before tax. Now, is there any extraordinary item? Not there. If it is there, extraordinary item, gain in nature, already added. To reverse, have to subtract. So, minus extraordinary item, gain in nature, 0. Then, extraordinary item, loss in nature is subtracted. To reverse, you have to add back. Add back extraordinary item, loss in nature. Harry, what happened? Concentrating? Okay. Now, this 6 lakh is called as profit before tax and extraordinary item. Any problem? So net profit before tax and extraordinary item is 6 lakh rupees. Now, what is the significance of this dividend payable 30,000 rupees? Please tell me.
There is no cash outflow for the dividend which has been proposed. So the dividend of 3 lakhs, only 270 has been paid. So while calculating that financing activity, we subtract only that much.
Wonderful. Now, he said rightly, 2021, what is the dividend proposed? 2021's dividend proposed is how much?
3 lakhs.
3 lakh rupees is the dividend proposed. 21-22's dividend proposed will be proposed when? In 22-23, somewhere here, 3.5 lakh rupees is dividend proposed. Do you agree with me? Now, whatever dividend is proposed here in 21-22 pertaining to 2021 is approved where? In the AGM here. So here, let's say 31st of August, AGM is happening. In the AGM, what have they done? They have approved the dividend. The moment the dividend is approved, please tell me what is the entry for that? Equity dividend account debit, because it is expense, not expense, it is appropriation of profit. Means this dividend, if I pay, it reduces my profit. Profit is what balance? Credit balance. To increase profit, credit. To decrease profit, debit. This equity dividend is going to reduce my profit. Hence, I will debit this. 2. Dividend payable. How much? 3 lakh and 3 lakh. Within how many days are you supposed to disburse the payment? Within 30 days. Means 30 September. By 30 September, I have to finish my payments. So by that time, how much payment has happened? Only 2,70,000 payment happened. So dividend payable account debit to bank. How much? 2.7 lakhs and 2.7 lakh. So what is the balance in dividend payable ledger? 30,000 rupees is the balance in the dividend payable ledger. Any problem in this? So that is how this 30,000 is coming in your dividend payable ledger. Is this got anything to do with my net profit before tax and extraordinary item? This is a liability. This has got nothing to do with my calculation of net profit before tax and extraordinary item. Am I clear? Dividend payable, remaining 30,000 is there. No, will be shown where in the financial statement of 21-22. Here at the end of the year, where will you show this? Under current liability. Where in the current liability? Other current liability. Any problem? No issues. Okay. So here when I discuss this, what are you supposed to even recollect? In dividend concept, we discuss one concept. If this amount is not payable within so and so date, within so and so month, it has to be transferred to this account. If it is still not paid for 7 years, it should be transferred to Investors Education Protection Fund. All that you have to recollect. All that should be by heart. If it is not by heart, if you're not able to recollect, what has happened? You've not revised. How many of you revised that concept? And how many times? After we finish class, how many of you revised that part? Nobody revised. Why? Because I didn't give the notes. Correct? No? It was written where in my notes. Who followed up? Kaushik followed up. Correct, na Kaushik? Yes. Apart from the who followed up. Anybody else? I didn't give on purpose. I had it ready. I was wanting to see how many people have that eagerness. Sir, kudunga sir, I want to revise, sir. Nobody was mad at me. Everybody, sir didn't give. Okay, sir didn't give. We didn't study because of that. Who will lose marks in exam? Who will fail in exam? Now tell me, what is the point? Forgot everything. Now you'll sit and watch the video one more time. Do you have that much time? Please tell me. Tell me. Who's okay? For what purpose you're sitting here? What is your ultimate objective of you being here? Sir, to prepare well for the intermediate examination so that when we go and sit in the examination, we clear in one shot. Not just pass, but with excellent score, grand score. For that, who has to take effort? Teacher, I will take effort. I'm taking also. Then who has to take effort? Student. Out of you and me, who should take the highest amount of effort? Teachers are settled now, boss, in their life. Teachers are settled in their life. CAs are settled in life. Who is yet to be settling in life? You. So who should be more anxious? Sir, I have to study, I have to revise, test. Who should be more behind it? Who? You. Where is energy? Where is the motivation? The motivation, energy will come not now. When 2 months before exam. Oh, 2 months later exam is coming. Poche. In that moment, what will happen? 2 months of time, so many things to study. Too many things on your plate. What to eat, what not to eat, don't know. You'll eat something. In that pressure, your tummy is already half full. So whatever variety is there, nothing is going inside. So in exam, what is there to present, boss? Why do you put into that situation of extreme circumstances where under that only you will study? Why don't you put that pressure from now itself? We people, human beings, are driven by pressure. Two types of pressure. One is external pressure, which the circumstances gives you. One is the pressure that you can create for your own self. I always believe in creating the internal pressure, means the pressure by your own self. Pressure means I'm not dealing harassment. There's a difference between pressure and harassment. Some people torture themselves. They want to go out, but they'll not go out because they want to study. So they'll take the book, but they'll not study because their emotion is, I wanted to go out, but because of I'm not going out. Donkey fellow, when you wanted to feel about it, rather you have gone out, no. Spend 3 hours and then come back. Effectively, you would have studied more. With that feeling that I wanted to go out, you didn't go out. I wanted to watch CSK match, I didn't watch it. You didn't watch it, you didn't enjoy it. You're with the book, but you're not in the book also. You're not focusing on the studies also. What is the problem? In between path. Inge milla, ange milla. Na idhar ke, na udhar ke. What is the point? This is all the common mistakes that we do. Enjoyment moment, enjoy it. No, who says no? You enjoy 3 hours, 4 hours, but when you're back, come with a strong bang. And when you're preparing, when you're studying, give you 100% no, not just 100%, give you 1000%, boss. If I'm asking one question, if you're not able to recollect it, what is the point? Imagine there's only one small concept that I've asked now. There's so many concepts that we've studied. So many concepts. How will you remember? Not just accounts, you have multiple subjects also. How will you remember? Foundation is nothing but 40% was your 11th and 12th only. So remaining 60% effort only you had to put. But in CA intermediate, you have to put effort from scratch. From 1%, from 0% you have to put efforts. Which means full 100% effort you have to put. And same 9 months is available now also. So if you don't be vigilant from the beginning, if you're not cautious from the beginning, at the end, everything will go for a toss. I have seniors of your friends. I mean, your friends who are seniors, who listen to me, who cleared everything in first attempt. Or with, decent score or good score. And on the contrary, we have so many other people as well who didn't listen to what I say. They started the preparation at the next moment. They gave the exam, they flunked. You cannot perform well unless until you have the data in your mind. And to ensure the data is there in your mind, what are you supposed to do? Multiple revision. The revision techniques that I've suggested is only the key to success. If this is understood, nobody can stop you from winning. Rest, enjoy. Can I go to the next question? Illustration 17. From the following extract of balance sheet of Global Limited, determine the net profit before tax and extraordinary item. Equity share capital is given, 8% preference share capital is given, surplus is given. Interim dividend paid how much? 1 lakh on the equity shares. Wonderful. Now please tell me, people, for me to calculate the net profit before tax and extraordinary item, what is the first thing that I need? I need surplus. Do I have the information? Yes. So I have closing surplus, I have opening surplus. In the beginning of the financial year, I had the profit of 7 lakh rupees. How did it become 25 lakh? So during the year, I had made more profits. How much profits you made? 18 lakh rupees more profit. So please come back to the format. Please write the heading. Illustration number 17. 15 or 16 or 17? 17. What happened to 16? We didn't do 16, is it? Chalo, no problem. We'll come back into it. We'll do 17. Since we started, we'll do 17 first. Illustration 17. So please tell me, what is my closing surplus? 25 lakh rupees. What is opening surplus? 7 lakh. So what is the net profit? 18 lakh is my current year surplus. I have to go in same order. What is the first thing that would add? Equity dividend. Any information about the equity dividend? Any information about the equity dividend? No. So 0 it is. Any information on the preference dividend? No. But interim dividend is paid. You cannot pay interim dividend unless the money is paid to the preference shareholders. Interim dividend is paid to whom? Equity shareholders. Even before you make the payment to equity shareholders, you have to disburse the payment to the preference shareholders. Are you able to follow? So now 8 lakh will calculate on the 10 lakh rupees. So how much it is? 10 lakh into 8%. I will calculate the dividend on that paid up capital which I've used throughout the year. Opening is also 10 lakh, closing also is 10 lakh, which means throughout the year full 10 lakh you have used it. So on the 10 lakh rupees, 8% is how much? 8 lakh rupees is the preference dividend that you should have paid. And without paying that, you cannot pay interim dividend. You cannot pay interim dividend. So definitely 8 lakh would have been subtracted earlier. To reverse that, I need to add back 8 lakh rupees. Any problem? 8 lakh 80,000. Sorry, people. 10 lakh into 8% is 80,000, not 8 lakh 80,000. So add back 80,000. Wonderful. Then interim dividend is earlier subtracted how much? 1 lakh. Now to reverse, we need to add back 1 lakh rupees. Any problem? Any transfer to reserves? Any transfer to reserves? No. So please tell me, what is your PAT? 19 lakh 80,000. Wonderful. Can I start cash flow statement with this? Can we start with PAT? No. So refund of tax, provision for tax is not there. So what is your PBT? Same 19 lakh 80,000. Any extraordinary item? No. So what is your profit before tax and extraordinary item? 19 lakh 80,000. 19 lakh 80,000. So net profit before tax and extraordinary item is 1980. Since company has paid interim dividend on equity shares, although the final equity dividend is not paid on equity shares, dividend on 8% preference share is paid. That is, without paying the money to preference shareholders, you cannot make the payment to the equity shareholders in form of even interim dividend. Am I loud and clear? Now coming back to question number 16. You calculate. I'll give you 2 minutes of time. Please do it. Equity capital they've given. 10% redeemable preference share capital given. Surplus given. Dividend payable given. Final dividend. Previous year, current year. Interim dividend is given. Please calculate fast. Any problem? Answer please. 4,50,000. Others? Online people, please respond. What is your answer?
4
Surplus
lakhs.
250 is the profit of previous year. That is beginning of the previous year. In current year became 450. So how much profit added? 2 lakh profit added. So 4.5 lakh minus 2.5 lakh. So 2 lakh rupees is your current year profit. Equity dividend is how much? Previous year. 1,50,000 we have to add back. Any preference dividend? Sir, if you are making the payment to preference or equity shareholders, that is not possible without the payment to preference shareholders. So preference shareholder on 5 lakh opening balance 10%. Dividend is calculated on the paid up capital. So on the entire, see, opening and closing both are same. So in the entire 5 lakh rupees, 10%, which is 50,000 rupees, we have to reverse. So earlier this was subtracted. To reverse, we have to add back. Interim dividend is how much? 50,000 rupees earlier subtracted. Now to reverse, we have to add back 50,000. Transfer to reserve 0. So what is my PAT? 4,50,000. And I suppose there is no refund of tax, no extraordinary item. So your profit before tax and extraordinary item is also 4,50,000. Net profit before tax and extraordinary item 4,50,000. Eighteenth question. From the following information, for the year 31st March 22, means current year 21-22, calculate the net profit before tax and extraordinary item. So what is my surplus, people? Opening is 2 lakh, closing is 540. What is the formula? Closing minus opening, opening minus closing.
Closing minus opening.
Closing minus opening. So what is my closing? 5,40,000 minus of minus 2,40,000. So it becomes 7,80,000. 780?
40.
So it's 2 lakh. Sorry, it's 2 lakh. Okay, sorry, it is 2 lakh rupees, not 240. 2 lakh rupees. 7,40,000 rupees. Means in the beginning of the year, I actually had a profit of 7,40,000 rupees. During the year, you made a loss, and loss reduces my profit. So how much is the loss? 2 lakh was the loss. So by the time I came at the end of the year, my profit became 540. So because of the loss, my accumulated profit got reduced. Anita ma'am, can I have my phone once? Easy. Now, proposed dividend current year. This is proposed dividend previous year. So which is relevant for me? Previous year is relevant. So add back 2,10,000 rupees. Any information on the preference dividend? No. Any information on the interim dividend? No. Any information on transfer to reserves? Yes. How much is transfer to reserve? 150. So you need to add back 1,50,000 rupees. So what will I get? Profit after tax. How much is profit after tax? 11 lakh rupees. Is there any refund of tax? No. Any provision for tax? Yes. Provision for tax made during the current year. 230. Earlier subtracted in the P&L. To reverse, I need to add back 230. So add provision for tax 230. 13,30,000. 13,30,000. There is no extraordinary item. So profit before tax and extraordinary item is 13,30,000. Net profit before tax and extraordinary item 13,30,000. Nineteenth question. Please do it. I'll wait for you. Sorry, you're seeing the question. Done? Closing minus opening. 6,72,000 minus 2 lakh. How much it is? 4,70,000 is my current year surplus. 4,72,000 is my current year surplus, which is coming after all the appropriation. So all the appropriation what you've done, please cancel it by adding back. So what is my appropriation? Is there any equity dividend? Proposed dividend of the previous year is there? No. When it who said no? So add back 1,80,000. Any preference dividend? No. Interim dividend during the year? Yes. How much? Add back 1,44,000. Any information about transfer to reserves? Yes. 2 lakh has been transferring to debenture redemption reserve. For the purpose of redeeming the debenture in future, I need money, no? So from the savings, I'm transferring. So this is a reserve created out of the revenue reserve. Hence, we have to add back. How much it is? 2 lakh rupees. Then I will get how much? 9,96,000 is profit after tax. Wonderful. Then is there any provision for tax? Yes, sir. During the year 216. So sorry, 2 lakh rupees. Sir. Provision for tax is given, income tax paid is given. Which should I take? Please tell me. This data what we're taking from the P&L. In the P&L, do you record provision for tax or income tax paid? We record the provision for tax. Income tax paid is not affecting your net profit before tax and extraordinary item. Income tax paid is not affecting your P&L. Hence, this is not relevant for me. This is not relevant for me. So add back provision for tax, how much? 2 lakh rupees. Any refund of taxes? No. Any extraordinary items? No. Hence, what is my profit before tax and extraordinary item? 11,96,000. Any problem? Guys, when I'm saying transfer to reserves, I will only reverse those reserves created out of revenue profits. There are some reserves which is created out of capital profit. Example, when the share is forfeited, and after the issue, there's some amount left in your forfeiture account. And whatever amount is there in forfeiture account, we transfer to capital reserve. So reserve got increased. Reserve got increased because of revenue transfer or capital transfer? Capital transfer. Will that affect my net profit before tax and extraordinary item? No. I'm telling you, let's say here debenture redemption reserve, how much is created? 2 lakh. Okay, wow. So previous year balance 0. Current year balance 2 lakh. So can I say in the debenture redemption reserve 2 lakh increased? Previous year it is not there. At the end of the year, at the end of the current, it became 2 lakh. How it became 2 lakh? Because we transferred the money from your P&L account to debenture redemption reserve. So this 2 lakh is created out of what reserve? Revenue reserve, P&L reserve. Am I clear? Now I'm telling you, there's one more reserve called as CR, capital reserve. Opening balance 0. Closing balance became 1 lakh. How did this money come in capital reserve? Sir, there was some share I forfeited. And then I fully reissued. So the forfeited amount which is there, no, I will have to transfer to capital reserve. So 1 lakh was the amount in the capital reserve. That I transferred to CR. So here also reserve increased from 0 to 1 lakh it became. Increased by 1 lakh. Will I consider this for the purpose of calculating net profit before tax and extraordinary item?
No, sir.
No. Because this 1 lakh was never created out of my P&L. It was never subtracted from my P&L amount. Hence, when I'm calculating net profit before tax and extraordinary item, I will not add this back. However, debenture redemption reserve created out of your P&L reserve, P&L profit. From my profit of 11,96,000, 2 lakh rupees I transfer to DRR. Example, I'm telling you. 2 lakh is transferred to DRR. In that case, this DRR is created because of the P&L profit, which is called as revenue profit. So only that I will consider for the purpose of reversing the reserves. In other words, when I said add back transfer to reserve means I need to reverse only those reserves created out of revenue profits. Only those created out of revenue profits. If any reserve is increasing in the balance sheet and that is not because of the revenue profits, that reserve increase I will not consider in my calculation. Do you agree with me?
Yes, sir. Yes, sir.
Is this logic clear or not clear?
Yes.
Wonderful. I have few more questions to do with this Net profit before tax and extra net item, nearly about some. This is which question number? 19. So 21, 23, 24, 26. 4 questions of this. Then we'll go to segment 2, segment 3. No homework. So I'll do this 4 questions when on Tuesday. So it becomes a revision for me also. So I'll revise and do this 4 questions. Then we'll go to segment 2 and segment 3 of the operating activities. So we'll take nearly about Tuesday and Thursday, 2 classes to complete your operating activity of the cash flow statement under indirect method. Then we'll do investing activity, then finance activity. 2 classes on that or 1 class on that. 1 class should be fine. Once the classes are individually completed, then we can go ahead and do the full-fledged question from your ICA module. So by, let's say, Thursday or Saturday, I should be done with the all independent activities. And next Sunday, we'll do a full-fledged questions. Is the roadmap plan clear? Once we complete the full-fledged questions for the indirect method, then we will do full-fledged questions for the direct method. So that take probably 1 class or 2 class maximum. So by next Sunday, we should be done with the 2 weeks from here should be done with the cash flow statement. If possible, in between, I'll try to have some extra classes wherever I get time. That will be intimated by Anita ma'am in the schedule. Am I loud and clear with my plan? Okay. Online people, am I loud and clear with what I'm doing?
Yes, sir.
Wonderful. Now, you have to get back to me with the doubts in your buyback and schedule 3. So 1 class in between this, I have to also plan for schedule 3 and buyback. So that you please let me know when you all of you are ready with the doubts. That day we'll have a doubt clarification session. Somewhere in between we'll do it. We'll not wait for the cash flow to get over. In between the cash flow itself, we'll have 1 doubt session for schedule 3 and buyback. Chalo people, with that, let's put an end to today's session. Today is what, Sunday? I'll see you on Tuesday, 4:30 or 5:30? 4:30 or 5? 5. Yeah, so Tuesday, 5 p.m. sharp. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, sir.
Thank you.